In searching for the right strategy for you, you could be totally lost in the sea of YouTube videos, courses, books, and tutorials. What if I told you that your search has ended at last and this video can teach you how you can trade only one strategy in one market and within one time frame in the day? So you don't have to spend hours stuck at your computer, waiting for the right setup, struggling with FOMO and impulsiveness that will destroy all hope of ever being a profitable trader. Staring at the screen all day can really drain you and result in you taking trades you shouldn't. This strategy will save you from all the anxiety and lots of time because you only need to spend 1 hour looking to see if there's a setup for that day. But how do you learn a strategy quickly even though you may not have traded before? Or you've studied technical analysis but found it really boring and never really understood all the complicated concepts behind it? No worries, I've got you covered. Hi, it's Lil here. I'm going to share with you the exact information which helped me grow from a losing trader to a funded trader who has almost doubled my account in 6 months. At the end of this video, you will not only have a complete strategy to work with, but also all the specifics like what time of the day to trade, what market you should trade in, and also see real-life examples of this strategy. In the last video, you've learned how to predict the market using a very specific strategy called the fair value gap. Please go through it after this video if you have not watched it yet, because that will form the foundation of this video. The instrument that I like most is the NQ on Nasdaq futures. This lets traders like us speculate on price movements of the Nasdaq 100 index, which is a basket of stocks comprising some of the best performing tech companies in the world. I also like the pace and the range of how it moves. About 200 to 400 points in a day. Each point can be $20 if you trade the E-mini futures, or only $2 per point for the micro E-mini futures. For beginners, it's best to stick to the micros first, which means I can manage my risk much better without losing too much. Most importantly, I like it that it moves at certain fixed times of the day and it follows the predictions of smart money concepts, which is my main strategy. The best time for this strategy to work is between 10 AM to 11 AM New York time, because this is the time that the algorithm is programmed to move prices. If you would like to know how the algorithm moves and manipulates prices to trap traders, please watch my previous video. It doesn't necessarily mean that we will take a trade during this period. What we are patiently doing is to wait for a fair value gap to present itself during this period. So if there is no fair value gap forming during this period, I will call it a day and stop trading because my setup is just not there. The worst thing to do is to be hanging around looking at the prices go up and down and imagining where the prices will go based on your gut feel. And before you know it, you would have entered a trade for absolutely no rhyme or reason. Do that often enough and that will spell the end of anyone's trading career, especially beginners. Okay, let's get back to the strategy. It is also known as the silver bullet strategy, which originated from the inner circle trader, better known as ICT. If you look at his YouTube channel, you will see a plethora of different strategies, and he has mentioned that by far, this is the easiest strategy that beginners can start with. When we mention a certain time in these videos, we will always be referring to New York time. So be sure to align all your charts to New York time. So let's hop on to an example now. First, we go to the 15-minute chart. From 7:30 to 11:30 AM New York time, we will see which side the algorithm has swept liquidity. The algos love to take out stop loss orders, which also means to sweep liquidity. Here we can see that prices keep on moving upwards to take out buy stops. Once it takes out all of these buy stop orders, it will manipulate the prices to fall. So between 10 AM to 11 AM, after the algos keep manipulating and driving prices higher and higher to take out all the liquidity, like in our example here, I will look out for prices to reverse in the opposite direction. Here we can see our setup taking shape. At about 10 AM, prices start to change direction and reverse. But how do we know it's a real reversal and prices are really coming down? We will need to seek confirmation from the lower time frames. We will drop down to the 5-minute and see if there is a break in market structure, which is also known as a displacement. If there isn't, we will drop down to a 4-minute or 3-minute or 2-minute, right down to 1 minute to look for a displacement. Once we see the displacement, we will look out for a fair value gap. Just to recap, the fair value gap is a 3-candle pattern with a space at candle 2, which prices has not gone to fill yet. Once we see prices coming back to the bearish fair value gap, we will short the market. So where will be our take profit target? It will be at the next liquidity pool right down below, where there are lots of sell stops from buyers who have taken long positions in the past. If you're feeling confused, wondering what displacement and fair value gap is all about, no worries, I've got you covered once again. Just look at my previous video and it will explain everything. Now back to the strategy. So before you take the trade, make sure that it has at least a 1:1 risk to reward ratio. If not, then just step away and wait patiently for the next setup. ICT said that setups are just like buses. When one leaves, another one will come soon. To increase our win rate, we also need to filter our trades using the very important concept of discount and premium. We cannot be taking every fair value gap that we see. We only want to take the ones that has got the highest chances of succeeding. Like all things that we buy, we always want to buy when it's at a discount. And if we are selling something, we want to make sure that we sell at a higher price or at a premium. So if we are not trading at a premium when shorting or a discount when longing or buying, we will not take the trade even if all the other elements of the setup are present. So how do we determine if we are trading at a premium or a discount? Okay, let's go through the checklist. Okay, number 1. Let's see which side's liquidity or stop losses has been swept from 7:30 to 10:30 a.m. Check. Number 2. At 10 a.m., is there a 15-minute price reversal? Check. Number 3. Is there displacement on a lower time frame? Check. Number 4. Is there a fair value gap? Check. Now it's time to pull the trigger. But no, stop, hold on. We need to make sure that we are going in at a discount if we are buying and at a premium if we are selling. But how will we know? Let's take a look at this chart. First, we need to take this displacement leg and divide it in two. The upper portion is known as the premium and the bottom portion is known as the discount. So here we are selling and we want to sell at a premium, which is around here. Usually I just eyeball the range visually and divide it into two. If you want to be more accurate, you can also use the Fibonacci tool to do it. Okay, let's go through another example. First, we start with a 5-minute chart. If our entry is not at the premium portion, we will not take the trade. So at the 5-minute chart, is there displacement? Check. Fair value gap? Check. Can we sell at a premium here? This is the displacement leg. We divide this into two. The upper portion is the premium and the lower portion is the discount. We are not selling at a premium here, so we need to go to a lower time frame chart like the 4-minute chart to check if we can sell at a premium. And if we cannot find it on the 4-minute chart, we will go to the 3-minute, 2-minute, and finally 1-minute to see if we can sell at a premium. And if we cannot sell at a premium, we will forgo the trade. We really have to be disciplined enough to stick to the rules of our setup. Let's go through the 4-minute chart. Is there displacement? Check. Is there fair value gap? Check. Can we sell at a premium here? Okay, this is the displacement leg. We divide this into two again. The upper portion is the premium and the lower portion is the discount. Okay, great. We'll be selling at the upper portion, which is the premium part. So this trade is good and we'll be taking it. So for completeness sake, this is how we will buy at a discount for a situation when we are bullish. Okay, let's look at this chart. Here, there is a displacement, as you can see here. Now, is there a fair value gap? Yes, there is one. Okay, let's divide the displacement leg into the two portions. Okay, the fair value gap is at the discount part. So, we will be buying at a discount and we will be able to take this trade. This strategy in a nutshell is what ICT taught in his 2022 mentorship, which consists of 41 videos. If you have the time, it's best to go through all of them, which contains lots of great concepts and hidden gems. This video plus the part 1, which I've made, is a summary of how I've broken down the concepts for myself that make sense to me, and I hope it will help you too. Feel free to ask me questions and also let me know what strategy you are implementing now. So see you, and remember to like and subscribe. It will really help me out and also the channel. Here's wishing you good trading and lots of patience.